this is where it gets kind of interesting. That's using the weekly figure, the rolling weekly figures where I talked about where 7 days represents 1 week, starting from the calendar, from the beginning of the year. This is a basic system that says any day of the week where I've got a long indication from the seasonal pattern, I go long. Any day of the week that's got a negative seasonal pattern, I go short. And by that I mean week one, if week one has got a positive, like we saw here, you go long the first day of the week, the second day of the week, the third. So you'll have 5 longs that week. And obviously we're talking small size positions here. Because if you see the leverage that I've put in here is only maximum 4.2 to 1. And that's accounting for the fact that over the course of a month, you could put on 22, 23 positions, equal size, carrying them for a 1 month period. So again, it's got some performance here if you play it for the long term, but it's also got some volatility. 22% annualized gain is not too bad if you could sit through the drawdowns like you had right at the beginning of the chart, where you're up probably 170, up 70%, and then go back to flatline. That's a tough thing to sit through. But again, it is a question for these seasonal patterns of taking the long-term view and realizing you're using them to bias your trading, not necessarily as a straight today it's going to do this, because it's not like that. 75% win rate is probably about as high as they get. And even the strongest patterns are probably more in the upper 50s and 60s. So you're going to get the losers. Like I say, it's not dissimilar to trend trading where you may at best get 50-50 on your win rate, and with trend trading it's usually more in the 30s or 40s. But you accept that because you know the winners are going to be big, and the losers, while frequent, probably are not going to be. So to expand this into how you can use it in terms of working with your own trading system, what I did here, and this is using Metastock to run a test, going back to the beginning, about a year worth of data. This is a very simple breakout system, 6-day breakout. So if the current day's close is the highest close in 6 days, you go long, and vice versa. So it's, as you can see from all the green and red arrows, it's basically an always-in system. 42 trades over the course of this time, only 15 winners. Bottom line is you lose about 5%. Now, taking into account the monthly patterns that I showed you, so January's good, December, November not so good for the dollar. This is taking a look at it again. You notice a lot fewer trades, only 25 trades. The win rate isn't all that much different overall, but now you're up 6%. So you've got an 11% swing, give or take, just applying one filter that says, if this month is a good month for the dollar, we'll buy, otherwise we won't buy. No, not with this, because this is a 6-day swing pattern. So that the exit signal is get out when you get, if you're long, get out when you've got a 6-day low close. So that's why you see the exit points, as opposed to in the beginning where you're always in one way or the other. So the seasonals will only tell you, yeah, take the signal or don't take the signal. It's not about the exit side of things. That's the system's performance on its own. But the idea being here is you've got something that can help you filter on a purely automated system to improve performance markedly. And this isn't exactly the best system in the world. I mean, I just basically threw something in Metastock and said, well, let's see how it looks. And let me see if the seasonals actually do bring an improvement to the overall performance. And as you can see, at least in this case, and you want to do your own testing, that's been the result. So like I said, all this data is in this report that I did, which is available. You can get it, and it's stuff that we do incorporate into the IFR markets for those of you who are working or using a broker that gives you access to us. And if you're not, give them a call and say, hey, can we get it? We don't mind having more customers. And I get emails from folks like yourselves all the time, even though most of our customers are actually institutional, brokerages and trading desks and things like that. So with that, I'll stop here and see if anybody's got any questions.